Hey, good morning, stock investors. It is Wednesday. It's October 10th, and this
Eight,
is the week
October the 8th,
Thank you, sir. It's October the 8th.
week
And
ending the 10th.
yeah, and I was going to lead into this is probably going to be one of the quieter weeks we're going to see for about 2 months. And the reason I say that is next week, we are going to get into earnings and it's going to stay busy and it's going to stay busy for about 6 weeks. And then finally, we're going to have periods of calmness again, if you can call it calmness. And the market sold off a little bit yesterday. I think there was some stories out there that caused some stocks to go down. And in general, the stocks went down. The futures are trying to go up. Dow is up, S&P, NASDAQ, and I know the Russell is also up. As we look at it, it's not a big problem yet. The S&P is doing great. Over the 1 year, it's up 16.75. That is a very good rate of appreciation, and the NASDAQ is up 25%. So I'm joined by my colleague, Daryl. How are you this morning?
Doing wonderful, Victor. How are you?
And I'm really good. I've been
Good.
trying to build up a little bit of cash just to be ready should we have a more substantial sell-off. We'll see if that happens. I'm got my fingers crossed that, if it happens, then it's not too bad. I continue to feel that we do need a solid, medicine taking of, a nice pullback 5% just to get some of this froth off the table. Some of these stocks have been just going up way too fast. I think the story around AMD is good. It's just, man, that stock went up like 30% in 2 days. It's a big cap. So when stuff like that's happening, it's like, oh man, are we playing with monopoly money or are we playing with real dollars and cents? But I'll just keep building a little bit of cash by selling some of my weakest stocks. And I think I have good stocks in my portfolio, but I challenged myself to sell off a couple so I can have some cash around in case we do have a good substantial sell-off like the one we had in March and April. I could take advantage of it. So if you're tuning in, just to introduce the channel, we are stock investors. Daryl and I have different ways of looking at stocks, and we hope that you find our research and analysis interesting. My point of view is I'm a long-term investor, and I try to focus on fundamentals, and I value companies by looking at their net present value of future free cash flows. I'll be showing that on a number of stocks. Also be showing net present value based on their earnings per share. What's going to be the profitability of that business? To see currently, is the stock price above or below intrinsic value? Is it being priced at a discount? Daryl looks at the charts, and it's fascinating to see how a stock has traded, how it's setting up, what I think can be taken from those charts as to what might happen next. That's a very fascinating perspective that I love to see. I actually showed up with stocks in hand that I wanted Daryl to look at today. So I hope you enjoy and find the research interesting. We certainly put a lot of effort into it and hope you're getting a lot of value from it. Now, some of the stocks that we're going to cover are going to be provided by viewers, and some of the viewers are members. So if you're a member and you want us to look at a stock, it looks like Peter's on, you want to look at LFMD, we can look at that. And if you're not a member, no big deal. You buy a $5 super chat and we can take a look at the stock that you would like to see. And you can also become a member on the fly. It's very easy. It's on my homepage. Look for the join button and you can join the channel and, participate in the chat and put in your stock request. So Peter, great to have you. Hopefully you are having a good morning. I'm going to put LFMD on the list. Just bear with us. We've got probably maybe about 20 minutes of content to go through, and then we're going to get to LFMD and we'll analyze it. And it looks like Kirk is on. Very good to see you. Thanks for joining. And all right, cool. So the markets are trying to rally. Just looking at the heat map, yesterday we had some stocks. Tesla did sell off quite a bit on news that they released a less expensive car. They took some features out, took some cost out of their car, and then priced it lower. The market didn't quite like that. I think the car business is tough. I mean, we can look at, maybe later if we have time, we can look at Tesla and we can look at Ford. Ford is a well-run company, but their stock just hasn't done anything. The car business is really competitive. It's hard. It's expensive. And, you know, Tesla trades as a technology stock. Great. But they keep selling cars. So, you know, I don't know if people are going to change their perspective on Tesla, but yesterday the stock really did sell off on news that they lowered their car prices. It's going to affect revenue. Also, volume sales are going to go down because the government took away a $7,500 incentive that the U.S. government would pay for. Yours truly, I bought an EV in September, and man, they were wheeling and dealing. I talked to 4 manufacturers, and they really wanted my business. They were discounting like crazy. I ended up getting a Honda. I like Honda. I like Toyota. I like Ford. I like Mercedes. And Honda just made it so attractive from a dollars and cents perspective. And I think that I'm going to end up pretty much even with a new car if I compare the gasoline I was, you know, going to buy to operate an internal combustion engine versus getting an EV. That's how good the deals were in September, but we're in October. And now without that government incentive, I think a couple of things are going to happen in the fourth quarter. One, cars are going to be more expensive, or they're going to have to take away some features to make the car priced where it was before. You're losing that, you know, that incentive, which makes the customer feel like, hey, I'm getting something that's going to go away. So that urgency is gone. And a lot of demand was pulled forward. Speaking for myself, if that incentive wasn't being taken away, I probably would not have bought a car in September. Probably would have said, you know what, it's not a necessity. I'll just kind of wait. So the car industry pulled forward a lot of demand. So Tesla, Ford, GM, Stellantis, go down the list. I think they're going to struggle in Q4. I think the numbers when they report them at the beginning of 2026 are going to be terrible because all the demand that was pulled forward is going to make the numbers that they report for Q4 look terrible. So we'll see where Tesla goes from here. It's always a stock that I can't put my finger on what drives the stock. It is a very popular stock. And Google, our friends over at Google, really, the stock went down quite hard. And, I thought that was a little bit of a surprise. It has had a nice 60-day period where the stocks really moved higher. So maybe investors are just kind of taking some profits. Maybe. It'd be interesting to look at the charts on that one. If we have time, I'm going to see if we can look at Google. I'll just note it there. All right. So I wanted to have just a little bit of opening remarks, but Daryl, you had a couple of topics you wanted to take on. Can we go over to you and cover that now?
Sure. So this topic I mentioned on. Okay, why is it doing that? That should just expand. I'll just move this over and we'll look at it that way. So I talked about I'm still generally bullish at this time. I'm hearing a lot more bearish sentiment recently, but I am still bullish at the moment. And this was just one of the reasons. And one of the things I'm thinking about doing is putting a PowerPoint slide or something together with the bullish points on one side and the bearish points on the other side, just so we can adjust and talk about them as we go through this time. But one of the reasons I'm bullish was after this particular report. I've been tracking earnings on all these companies, for all the companies that I own, for basically since December of 2020, when I transitioned to managing my own portfolio. But one of the reasons I'm bullish is this is the first quarter or third quarter where analysts went into the quarter, and by the end of the quarter, they had raised their estimates. So this is the first time this has happened since Q4 of 2021. So they
Now,
actually,
if I may,
go
the
ahead.
Q4 of 2021 was like the last step we took before we fell off a cliff.
Yep, exactly. And then 2022, they were all down, and even Q4 of 2023, they went into the quarter, and by the end of the quarter, they had reduced their estimates by 7%. So this is the first time that we went into a quarter and they actually raised their estimates. So that's somewhat of a bullish indication.
Can we have a conversation around this? Because
you bet
this is almost like opposite to what the market's been doing, right? 2023, 2024, 2025 up years. It's 23 was a great year, 24 was a great year, 25 is looking like a good, it might be great. And you look at the earnings per share, the expectations are being taken down, right?
Mm-hmm.
During an appreciating market. It's almost like counterintuitive.
Yeah.
And so it's just surprising that the data is telling us, companies are trying to tell us, hey, things are not as good as we thought. We're going to have to bring down expectations, and the stocks kept going higher.
Yeah. This year, 2025, was basically related to the tariffs. So their estimates were higher, and they lowered them by the end of the quarter because of tariffs. So this is mostly tariff impact.
Yeah. Yeah, I get that one. It's just, how do we explain 23? How do we explain 24? They're like, companies were telling us, hey, things aren't as great as we would like. And I'm not sure, I can't remember what the economic sentiment was in 23, 24. But it's just interesting that the data is like, if you would have showed me this chart and said, did the market go higher or lower? I would have said, not knowing, let's just pretend I didn't know what happened in 23 and 24. I would have guessed, oh, well, I think the market went down in 2023 and it went down in 2024. And it looks like you're saying and rationalizing, with the expectations being raised a slight bit, I think the market's going to rally, because now we're making a turn of going from negative sentiment to positive sentiment. So that's just interesting observation that I'm making, just high level.
Yep. Then one other quick chart is these are the sectors and where the estimates are being raised versus where they're being lowered.
So energy, technology, and the third one is
Communication services, financials.
So energy,
you get down here to healthcare, and that one definitely took the biggest hit in the third quarter, where estimates were ratcheted down from where they entered the quarter versus where they exited the quarter.
Wow. Okay. Good stuff.
So that was just one thing that I thought was interesting. Then the next one I was going to talk about was ARCC, but we'll see if that's something we want to cover.
Yeah, we can get into ARCC to get started. And while I have the mic, Brandon, I see GMAB. It's on the list, sir.
Okay, let me add it to mine as well. Okay, I know a lot of people that are invested in ARCC. It's a business development company, and it's related to Ares, which is an asset manager. So this is an externally managed BDC. But I want to point out their book value. This is something I watch very closely for BDCs, is their book value. So in 2021, when I started managing my own investment, they had a book value of $18.95. Then it dropped down 50 cents to $18.41. In 2022, 2023, it went up to $19.25. In 2024, it went up to 19.87. And then their current book value for the trailing 12 months is 19.88. So this is the way I tend to, I hate to use the word time my buys, but I watch this value very closely. I try not to buy if it's extended too much above that price. And I start looking for opportunities when it drops down below its book value, which has to be adjusted by year. So I started buying this one in 2021. I have an average cost of just above $17.50, about $17.60 or so. And I have this aqua colored line or cyan colored line at the book value. So on my daily charts that I manage all of my holdings with, I always have that line sitting right where the book value is, so I can keep an idea about where either it's extended above or price below. So you can see all of my sell points I was trimming because it was getting a little bit extended. So I owned 1,500 shares, and I've trimmed about 2/3 of those at this point, which has basically returned all of the capital back to me. So I'm in this with no invested capital. It is getting down below its book value again, which it hasn't done since the April tariff announcements. So that this wasn't a surprise here, and you almost have to kind of exclude that, but it would have been a good opportunity to buy. This one pays a dividend of 9.67%. So I'm an income investor, and this is a really nice yield, and my yield's a lot higher than this. So anyway, now that it's getting down below the book value, I'm going to start watching this to see when a good buying opportunity might come back in. With the reduced rates, interest rates, BDCs tend to be hurt a little bit with those. So you have to take that into consideration when you're buying these.
Is that because they will, when they do a deal, the implicit rate on that deal, the interest that they expect to make is going to go down substantially.
Yep.
Okay.
So anyway, now that they're getting below that book value, it starts to become enticing. So let me just go to like 3 months. No, I'll go a little bit more, maybe year to date. Just keep an eye on this RSI. So nope, I didn't want to do that. I want to do this. This RSI is currently sitting at 26.
Mm-hmm.
Very oversold. So when that starts getting more positive, then we probably bottomed out, and things will start turning around. And also keep an eye on this PPO, which has been in a downward configuration since July. Then if I take these off, we can see that the difference in the moving averages is starting to converge. And as soon as we get a bullish crossover, might be a really good time to, if you're an income investor, want to make sure you're getting a good price. This will indicate that you're getting a good price.
Interesting. Okay. So looking at Ares Capital and kind of doing just a fundamental review. So market cap 14 billion. The stock has come down 5.65% on its price. It pays a very nice dividend of 9.67. And over the 5-year, this is done quite well. If you consider, if you're making a high dividend and you add an appreciation of 40%, you're doing okay. When we look at a couple of things, I wanted to look at their actual financial statement and understand, how do these guys make money? So here's their statement of operations, or I like to call it the income statement. So they make money off of their investments, first with interest rates. So if we look at for the 6 months, first 6 months of 2025, they've made $1.47 billion of revenue. Most of that is interest income from investments. So they're making an interest off of an investment. And the logic that, hey, if interest rates are going down, these guys are going to be affected by it. That's completely logical. Then they have some fees around capital structuring fees. Dividend income is the next biggest category. So they're making dividends on investments they're making. So that's how they make money, is mainly on interest. They're making deals, and that's where the income that they're generating. What's their expense? So they are paying interest. They are paying some management fees.
Yeah, they because they're externally managed.
Okay.
By Ares.
So they're quite profitable. That's a pretty good profit margin. And then they have some, cells of businesses and so forth. So overall, they're quite a healthy company. Their revenue, earnings per share did go down from last year to this year. First 6 months, it went from 1.28 down to 88. So that is that's a negative trend. Moving back to just taking a look at their fundamentals, let's take a look at their forecast. 8 analysts cover this company, 15% discount. It's expected that their revenue is going to expand for 1 year and then be flat. And their profitability is going to go down a bit over the next couple of years. PE ratio is going to stay low. So this is a really nice income idea if you're looking for income, maybe an older investor. And the things that I think are going to help Ares Capital Corporation is we are in an environment where more deal making can happen. We are in an environment where acquisitions can happen. And if these guys can get involved in maybe financing some of those transactions, it could help them quite a bit. But the negatives are lower interest rates, excuse me. If lower interest rates are going to reduce the amount of interest, because interest was their biggest revenue, then it's going to affect Ares Capital. So, all right. So that is
Let
Ares.
me close out with my trade history just so you can see that, and I can show you that watching that book value on this kind of business is a pretty good thing to do, and make sure you're buying low and trimming if it gets too extended above that book value. So you can see all of my trades here. I bought as many as 1,860 shares. I held 1,500 shares for quite a while. And then you saw the trimming that I started back at the end of last year. So I'm down to my core holding of only 500 shares. And I'll continue to watch that book value and the charts to determine when I start ratcheting this back up, which may be over some time. But this has provided $11,000 of return for me. I don't have any losses. None of these are losing trades. So watching that book value is pretty valuable. It's been on the total return, it's been 34.1% since my first buy back in 2021. Annualized, that's 15.1%. For my current holdings, my return are 105.4. Annualized is 46.6.
Nicely done. And the thing I'm walking away with, maybe other viewers are realizing it, is how we buy stocks is really important. It's kind of easy to find really good businesses, right? You look at like NVIDIA, man, that's a great business. How we're going to buy NVIDIA makes the big difference between making a lot, maybe not making any money, or even losing money. So how you buy is really important. All right, let's take a look at Procter & Gamble. Now we're in an area or a time in the stock market where technology stocks have flourished, and most definitely have been the place to be, along with communication services, financials, and they really have increased really, really fast. Now, is that going to last forever? Over time, right? Long term, if you're a young investor, you should really be focused on companies that are experiencing growth. But for maybe the older investor that's looking for income stability, or to diversify into some stocks that are going to do well when everything else is failing, Procter & Gamble is a safe stock. It's a consumer staple stock, and it's a very well-known name. At home, you probably have some of Procter & Gamble's products in your bathroom, shampoos, toothpaste, your laundry room. They have Tide. In your kitchen, and you just name it, things that we consume and will continue to consume, whether we're in a recession, we're in a boom economy. Procter & Gamble selling us products. Very efficiently run company. And their stock has not been doing all that great. Over the 1 year, it's down 9.76. Over the 5 year, it's barely up 9%. You're earning a dividend, but you have underperformed the market for sure. Back in 2022, this stock did perform, and I don't know that it performed well. It kind of dropped. Look at that. I thought it would have performed well because in 2022, tech stocks were just getting smashed. but Procter & Gamble did not use that period of time. It kind of had a delayed rally later on. So looking at Procter & Gamble, it's a PE ratio of 23 with a forward P of 21.86. The S&P average is, I'm going to say it's about 26. And analysts think it's a buy. The company continues to grow, even though it's slow growth. It's a big number they're growing, and it looks like they continue to grow. They have gross profit margins that are better than, let's say, a Walmart, not quite as good as other sectors like technology. Free cash flow is very, very good and very consistent. So they'll continue to pay that dividend, no problem. They continue to increase the dividend as well, but it's not very high. It's a well-run business. Profit margins, very good, 18.6. Free cash flow yield, 16.66. And you see how consistent they are. That's something that I do like about this business. Very, very stable. Looking at the forecast, what analysts are thinking, 14 analysts are covering this stock, and they think 15% discount. And they think the company is going to continue to grow, slow growth, expand profits. And their PE will either continue to go down or their stock price will go up. I think the stock price is going to go up on a stock like this. When I value the stock, I don't have a big discount available, 9% discount available on Procter & Gamble. But I think it's a good idea to consider for me because as I see maybe the technology trade, the AI trade get too expensive, maybe this is something I can lean on, Procter & Gamble. Maybe this is a hedge on, okay, I'm sitting on great gains, but maybe I could buy some Procter & Gamble, collect a small dividend, and if the wheels come off, the tech trade, communication service trade, if that whole space begins to dive like this stock did yesterday, this stock really rises when everything else is falling. So that's Procter & Gamble. Can you take a look at the charts for Procter & Gamble?
Yeah, I'll start off by just looking at some of their brands. So I pulled up their website, and they have the Charmin toilet paper, Bounty paper towels, Head and Shoulders, Old Spice, Pantene, Dawn, Cascade. So these are all really products that nearly everyone probably has at least one of the products in their home.
And just mentioning on toilet paper at home, I would consider that a mission critical item.
We all know that from the when we had the
when we had COVID, man, you had
2020.
lines out Costco that were half a mile long.
That was crazy. So while you were talking, I annotated the Procter & Gamble. I have a 5-year daily price chart here. I've put the auto support resistance line about where it's currently trading. And we can see that it does find support there. We can see that it finds support there back in July. It found support back there in April. And then if we go all the way back to 2022, it was finding this point to be resistance. And we found some resistance again in August of 2023, and then it broke out. But every time it comes down and tests that, it hasn't broken down below that yet. So what that tells me, based on what Victor was sharing with us about it, could be a good stable company if things start going south with some of the high flyers at the moment, that people are going to find comfort and stability in a stock like this, a sleep well at night stock. To me, this looks like a really good price. It's found support 3 times over the last 2 years, and it was resistance in the 2 years prior. So to me, it looks like a really good entry point. Let's take a look at, let me go down to just a year. It is trading below a downward sloping 200-day moving average. The 20-day crossed below the 50. Those are both downward sloping at the moment. The RSI did bottom out recently at about, 34. And it has moved back up, so it is finding a little more relative strength. The PPO had a negative crossover, bearish crossover on the 18th of September. The divergence between the 12 and 26-day moving averages reached a peak on the 24th and has since then been decreasing. So we'll probably get a bullish crossover in negative territory on Procter Gamble here within the next few days. The money flow is negative. The accumulation is not far below the peak, which looks to be in July of this year. It has declined slightly. As we see this money flow start returning back to positive, then we'll see this increase probably back to its all-time highs, or not all-time highs, 52-week highs back in July. Looks like a good entry point to me, Victor.
Man, I really appreciate that analysis, especially the 5-year. That looked really interesting. All right, so let's take a look at PayPal. And as I move over to PayPal, I wanted to check in on the stock market. Looks like the Dow is down a bit. Procter & Gamble, I believe, is a Dow component, by the way. And S&P is up a little bit. NASDAQ is up a little bit. The Russell down quite a bit. Looks like small caps are giving up some of their price. So that's what's going on the stock market. The next stock I wanted to take a look at is, PayPal has been a surprise. Their company in general is discounted. It's not like they're losing revenue. They actually continue to grow. They're profitable. They have a huge balance sheet. And the company, their stock has not done well. If you look at the 1 year, they're down substantially. And, is this stock going to ever line up with its intrinsic value? And that's, I don't know. I've been waiting around for that for quite a while. And back in, the heydays of 2021, which the market was overheated and then it really cooled off in 22, this stock was way up there at $300 a share. And now it's at 73. So this stock here was catching like a rally. Now today it's down 1%. So this is like the PayPal that's kind of been wearing on me. I'm like, is this thing ever going to start to get on a long-term positive trend? I don't know. PE ratio 15, forward P 13.6. The analysts think it is a buy with a discount of 12.86. As we look to the revenue's been growing. It's been expanding. And PayPal has been doing some good things around their Venmo business. They're monetizing it better. I think they're doing some things that are beginning to work. They just have to figure out how to grow better. If they can grow better and become more important in the market, the stock will flourish. This is a very good value if you consider what you're getting. What I'm looking at is the free cash flow is very consistent and very high in proportion to their market cap. Their free cash flow margin 16.3%, profit margin of 14.5%. So the fundamentals look good. Just the market has this on a list of stocks the market doesn't like. It's not excited about it. And I can understand why the slow growth isn't super exciting. Some analysts do believe, hey, this is an opportunity, although it's not a great opportunity. And some analysts believe this stock's going to go down. So there is a division among the analysts. The growth of the company should look good based on what analysts are seeing. This year is going to be pretty good growth. Next year is going to be pretty good growth. So those numbers actually look pretty darn good. And earnings per share is going to expand faster. So either their PE is really going to drop or the stock price is going to rise. So I would think that, we're in an era where there are so many companies with PEs in the 30s or higher. When you look at it at a PayPal, you're like, geez, 13, 12, 11, that's really, really low. Is that an opportunity? When I look at the valuation of PayPal, it's discounted by 48%. I think each share, if I measure the value of PayPal by looking at the net present value of their cash flows and add cash, take away debt, I get to an equity value that's much higher than their market cap, which translates into a value per share of $164, but the stock is trading at 74. So just highly discounted based on the comparison of PayPal versus their cash flows. What cash is going to be driven by this business and earnings per share as well. And I think my expectations are quite reasonable, if not very conservative. It calculates a very nice discount as well. So PayPal is really discounted. It's just the market. It's very hard to establish a trend or maybe expect a trend, as it is with any stock. But PayPal, I think, is more difficult than the typical stock. And I'd love to see your charts on PayPal. I'd like to hear what you're seeing.
Okay, I am seeing something that's a little bit constructive. So here's a downtrend line from the early 2025 January high. For the past year, I'm looking at a 1-year daily price chart. I drew this trend line to the lower high that we saw in July, and it had been trading below that. It found some resistance here and was trading below that, but it has broken that trend line as of yesterday. We'll have to see what the price does today. If it can stay above this trend line through Friday, then that's a pretty constructive looking chart. The 21-day exponential moving average, it's trading above that after trading slightly below it since about July. So it looked, and that is upward sloping at the moment. So if it can continue to hold this trend line break here, then I would be buying this as long as it stays above its 21-day exponential moving average.
Yeah. Interesting chart.
RSI looks strong, not overbought, even though we had a gap up yesterday. The PPO is in positive territory, and we might have a slight decrease today, but it is positive.
Interesting. Okay, so they have to have a longer positive trend, and then we'll stay above that trend line that you or that line you drew, and then that could change kind of like the whole begin to influence the sentiment toward the positive if this stock can have a sustained long-term rally. But today it's down 1%, so I'm not sure that PayPal is going to get it done today. Here we are again.
One other thing I noticed is yesterday it got up above the 200-day moving average. So the 200-day would have been resistance as well as that trend line. So as long as it can stay above that 200-day and that trend line, downward trend line, then it looks pretty constructive at the moment.
All right. So looking at the heat map, this is pretty much real time. NVIDIA is really moving up. So is Broadcom. We've got computer hardware companies moving up. The software space is looking okay. And then we got some red. Google's down, Meta's down. The financials are down. Probably financials and energy are looking the brightest red. Tesla's down today. It looks like consumer discretionary, home improvements down, travel is down, aerospace is up, and United Healthcare is up again. Good, very good. Eli Lilly. So it's technology once again leading the charge. So go technology. All right, so let's get into two requests. The first one being LifeMD, requested by Peter. This stock here is having a really volatile year. Year to date, the stock's been places. It's, traded for $6 per share up to $15 per share, back down to $6.66. Where is this stock going to go next? Over the 1 year, 37% rate of return. Over the 5 year, it's interesting how this stock's negative if you'd have been an early investor. And it really spiked. Man, it went up. This is a $316 million market cap company. So we're talking about a very small business, higher risk. Smaller businesses, they're great if you catch the right one, but they are riskier. Analysts think this is highly discounted, 87% discount based on what analysts are seeing on the earnings per share data. Now, the business is having exciting growth of 37% on a small number, but it's still a very nice percentage growth rate. This is a healthcare company. And let me go over what they are before we get into their fundamentals. So they operate as a direct-to-patient telehealth company that connects consumers to healthcare professionals for medical care in the United States. The company operates through two operating segments, telehealth and Work Simply. The company offers telehealth platform comprising of RexMD, a men's telehealth brand that provides access to virtual medical treatment for a variety of men's health needs. Okay. All right. So they also provide LifeMD PC, a virtual primary care telehealth service, which a provider for the primary care, urgent care, chronic care needs. Okay. So they're providing software. They're providing a consumer-facing telehealth service experience for consumers. Now, this is not a new business. Founded 1994. So these guys were ahead of the dot-com bubble. They got through the bubble and they still exist, but they're a small cap, which make me think, why haven't they grown? Maybe their ideas are not as great as one would think. Now, they are experiencing a good amount of growth. Let's take a look at their margins, see how profitable this business is. It's a very profitable business, 87% gross margins. That looks really good. And their profitability isn't there. That is a concern. They've been doing this for a while, and we're in healthcare, right? So healthcare tends to be more consistent than other sectors. People need healthcare, especially during COVID. I mean, healthcare revenues went through the roof for some companies, but I really like their gross margin. Looking at the forecast of what analysts are thinking about the business, we have 6 analysts covering it, and they are not agreeing. One says 15, another says 7. They are all above the current stock price. So that's encouraging. When we look at the forecast is good. They're growing quite nicely this year, and they're going to continue to grow. So that looks good. And they're going to get profitable in 2026, which is around the corner. P ratio is going to be 27 for a good growing business, 15. So the forecast looks good. Looks very good. I'm not sure I have a valuation on LifeMD. Let me take a look. I don't. So I can create one while maybe, can you take a look at the charts and I'll do a valuation?
Sure.
Thank you.
So I've drawn a couple trend lines just so you can see what the current downtrend is. The 21-day has turned positive. It looks like it got pretty close to testing it yesterday, and looks like it's testing it again today. I would feel more comfortable on a stock like this if it breaks up above this trend line. And just so you can see how powerful these trend lines are, when it broke above it back in May, then you ended up with, let me turn on my measurement tool here. You got 109% rise in a little less than 2 months. So that's why I like these trend lines for entry points. So it doesn't look too terribly constructive at the moment. It is showing a little bit of strength here. The RSI is sitting right in the middle. We peaked out at about 58 and returned back to current level of 49.53. The PPO tried to get into positive territory yesterday, but flattened out. So it's still in bearish territory at the moment. And the negative, or the money flow was negative. It did turn positive, and it's currently sitting in what I call no man's land, which is anything between 0.05 and minus 0.05. That money flow oscillator, because of the way it calculates, it's a little weird in between those two ranges. But once it breaks out either above it, it's bullish, and once it breaks out below minus 0.05, then it's considered bearish. Anything in between them is kind of, it can't make up its mind. So that's my thinking on LifeMD.
Okay. And I'm right in the middle of taking a look at it. So let me go back and I can kind of work on my valuation. So this is a small cap, and small caps, they're, investing is art and science, and you have to make a lot of decisions. If you look at a Procter and Gamble like business, which we saw earlier, super stable. People are going to continue to need their products, whether it be Bounty paper towels, stuff's going to be spilled in your home. You're going to have to clean up. You continue to consume that. But when it comes to LifeMD, this is a new business in a new category. So I'm going to have to make some decisions, and I'll make those decisions while you are looking at my analysis. So first decision is, what kind of discount am I going to use? I'm going to ratchet this up to 10% because it's a small cap in a new category. They've been around since 1994. So they're not, I don't have full confidence in them because that's quite a while. They've been around for a while. So next decision is, what am I going to have as a starting point for free cash flow? And the free cash flow that I'm seeing is 17.89. And I'm going to grow it first year by 25%. And then going forward, I'm going to grow years 2 through 4. That's a second qualitative decision I'm making, right? So the business is growing this year. It was growing at 36% and then 25%. This is a small business, so I expect they could grow for a long time. So I'm going to grow long-term growth by 5%. So this gives me an intrinsic value of $669 million. Now let's add cash and take away debt. So cash is 36 million. And then debt is 22 million. Shares outstanding. Make sure that's updated. So shares outstanding, 47 million. So based on cash, right? If they can grow well, that those big gross margins show up and their cash value is really good. 54% discount. Each share based on the projection of cash flow that I expect, discounted at 10%, is each share is worth $14 per share. And the stock is being priced at $6.67. Now let's take a look at earnings per share and update the earnings per share. So I'm going to use 2026 numbers because in all of our analysis, right, we're thinking 12 months ahead, 24 months ahead. And when it comes to earnings per share, I'm thinking, what do the next 12 months look like? And that's better represented by the forecast of what they're going to have in earnings per share in 2026, which is 24 cents per share. They're a growing business. They're small. 24 is fine. And they're going to grow earnings per share quite fast. So I'm going to go with 35. Analysts are saying 80, but I'm only going 35. Another decision I have to make. So based on the valuation, looking at their financial data, this is a discounted stock. It's discounted by 45%. Now, this is a discounted stock. It'd be, if they continue to grow and they become larger, I think the stock's going to work at some point. The stock has had moments, right? Like Daryl was showing that we had a period of time when the stock really rallied in the year, in 2025, from April up until June, the stock went up from less than $6 a share up to a peak of $15 a share. So I think investors found this stock, but since then it's really come down. So there's some non-believers getting out of the stock. So when's this stock going to rally again? I don't know, but I could tell you that when are they going to announce next? November 6th. This would be a really good watch stock, and really study what they have to say. Listen to the earnings call. See if you need to make a decision on this company of, am I a believer or a non-believer? Right now, I think they have a good idea. One of the things that I like about LifeMD, I think it's a good idea. I really like their margins. Okay. What things am I concerned about? They've been around since 1994. And why have their ideas taken so long to finally start to grow? And they're not that big. So that is a concern. Why is it taking so long? And, there are other competitors that are trying to get the consumer's attention for this category, right? You have Hims, which is quite popular. You have other sites like GoodRx is out there. So these guys are not free of competition. There's lots of competition. Of course, and what might be driving down the stock is maybe our friends over at Google and OpenAI are going to have a lot of healthcare related content. Like you can go on one of those sites and say, hey, what are, I have, let's say I think I have a flu. What are the symptoms that I should be confirming to see if I have a flu, and what should I be taking over the counter that would help with a flu? That kind of thing, I'm sure OpenAI and Gemini would probably help with. So I think that's going to be a stress on LifeMD. Is AI going to make LifeMD less important, less relevant? Are all the eyeballs going to go to Gemini and OpenAI? We'll see. We will see. So, Peter, good luck with that. I hope you found the analysis interesting. And I'll move on to the next stock. Brandon wanted to see GMAB. Let's take a look at GMAB. So Genmab is a biotechnology company, develops antibody-based products and product candidates for the treatment of cancer and other diseases in Denmark. The company markets Epkinly and Tepkinly, for adult patients with relapsed or refractory diffuse large B-cell lymphoma. So these guys are helping people that have particular types of cancers. Okay. They're a pretty big outfit, 2,682 employees. What's the stock been doing this year? It's doing really well. 1 year looks terrific. The 5 year, not terrific. So it looks like it's begun to get some momentum. Be interesting to see what their fundamentals look like. $20 billion market cap. So it's pretty good size market cap. And we're talking US dollars. All right. Revenue, 3.65 billion. And they're profitable. Low PE ratio of 14.69. Forward P of 20. Strong buy with a 25% discount. Growth looks excellent. And this is a pretty chunky number. 3.6 billion is a pretty good size number, growing 32%. One thing that I like about stock analysis is it brings together the forecast of analysts, and I'm really going to focus in on that because it's great that they're growing at 33%, trailing 12 months. But what is really important is how are they going to grow over the next couple of years? If they're going to continue that growth, this is a pretty good looking stock. If they're going to stop growing, not so much. So let's look at their profitability and free cash flow. Free cash flow looks really good, 1 billion. And oh man, margins, 94.5. Okay, looks good. So their revenue is going up. So doctors, the health community is discovering this drug, and they're finding that it probably helps people with cancers that they're targeting. And this treatment's becoming more and more popular. It's very profitable. So they're probably outsourcing their production and, just producing what's being sold to hospitals and patients and so forth. Profitability is really good. Free cash flow looks really, really good. Fundamentals look terrific. Top line growth looks good. Fundamentals look fantastic. Free cash flow looks terrific. Okay. So how are they going to sustain this growth? We've got 6 analysts weighing in. One analyst is, hey, this stock can continue to go higher. Another analyst is, well, I'm a little concerned. It's a little expensive, but overall, on average, 25% discount. So they're going to keep growing. This growth looks good. Okay. It's not like, breaking records. It's not 80% growth, but it's good growth. Okay. So, and the profitability is going to expand. down to the bottom line, the net income line. Forward PE, is this right? 1.96. That's like, that's so low, it's unbelievable. What was their PE ratio on the main page? Yeah, the current PE ratio is 1.5, forward PE of 20.9. So their net income 137. Stock price is 32. This PE ratio is incorrect. You have net income of $1.37. I mean, I'm sorry. Let me see here. So shares outstanding. I'm going to calculate the earnings per share. So yeah, the earnings per share is $21.62. It's really hard to believe. So let me go to their actual income statement, and then we'll go from there.
Yeah, Seeking Alpha has a forward PE of 19.53 for them.
Yeah, you want to, I think Stock Analysis does a really good job, but they're consolidating data through some coding and some lookups, and sometimes the data's not right. So I'm trying not to say something bad about them, but we got to confirm numbers, because if I'm going to invest my hard-earned money, I want to make sure I see the right numbers. So interim report. So they are making a lot of money. 17 for the full year of 2024, they made $17.74 per share. So they are making a lot of money, and their share price is like $22. So the gross margins were 94.5. So shares outstanding, and I'm going to note this. I'm going to use this for my update on my valuation, because this has all the metrics that I really can confirm. This is the company reporting them, so we're good. All right, so coming back to the stock price is up a little bit year to date, and it's really flourishing. Okay, so let's take a peek at debt. Just make sure that's not a big problem. Nope, almost $3 billion in cash, only $148 million in debt. Can you take a look at the charts, and I'll update a valuation on this company?
So
man, look at that.
Yeah, I've drawn a couple downtrend lines. So they really struggled after hitting their peak in 2022. So that's this top trend line, and would be a much more conservative entry point. And then I drew one from the July 2023 high across to the February and March high. And you can see that it did break out in June. It did retrace. So these trend lines aren't perfect, but it does give you a pretty good indication. So it did pull back, and once it broke through it the second time, then it was off to the races. And when it finally broke above this one, which would have been a really safe entry point. This one would have been a little bit more risky. But I mean, from here, let's see where it is. They're up 60% from that trend line, and 25% from that one. So neither one of those would have been terrible entry points. Notice also that it is trading above its 21-day exponential moving average, and it's holding that. Another good entry point on a run like this would be if it comes down and touches that 21-day EMA. As long as it can hold that 21-day EMA, then you're in pretty good shape to continue holding this stock. If it breaks that, you need to consider doing some trimming on it, because when it does fall, it can fall about just as rapidly. So in 1 week, it fell 21%. Here it fell 24% in right at a month. So they are in overbought territory. Let me come out to a year. They are in overbought territory, but you can see they can stay that way for quite a long time. That can either get resolved by the price just trading sideways for a while, or an actual pullback, but it is holding that 21-day moving average really well. The PPO has been positive, I would say, from the 9th of July. It did come back down and try to go negative, but it's been totally positive since the 12th of August. And take a look at the accumulation. That's very impressive. So even though the price was going up all the way from August through about the 3rd week or early the 4th week of September, the accumulation didn't really change all that much. But then this month, it is really shooting up, and we're at a 52-week high. Let me go back to the 3 years. This is a 3-year high for accumulation. So, oh yeah, one other thing I wanted to point out that I saw on this one is look at the shift in volume beginning right here. So this blue line here is a 50-day moving average of the volume, and you can see a definite step up from the end of September of 2024, and it is starting to increase again, the 50-day moving average on the volume. Let me get rid of that and go back to 1 year and look at the volume here on this run. That is that's very impressive. I think Dr. Brandon's got one live here.
Yeah, and I mean, I'm double checking their fundamentals because they look too good. Like,
yeah, he's
right.
he's got one. He's got one we should be watching for sure.
All right, so I'm gonna get this screen back. So let me take you through this valuation that I just pulled out of the oven, so to speak. All right, so we've got, this is the company. Now they have good growth, good profit. So it's a less of a risk than the stock we just looked at that had a 10% discount. And keep in mind, as we see interest rates go down, the discount rate will also go down on my valuations. But for now, it's going to be a 9. The higher you go, the more conservative you are acting. The trailing 12 months of cash flow was $1,091 million, and I'm going to grow the first year by 20%, and then years 2, 3, 4 by 15, and then long-term growth by 4%. That creates a net present value of all those cash flows of $32 billion. They have mostly cash on the balance sheet with very little debt. The shares outstanding are 616 million. It provides a 42% discount based on the value of the cash flows for Genmab. the earnings per share was where I had to like, triple check numbers because I'm like, am I seeing this? Am I seeing the wrong currency? What am I doing wrong? $19 per share, and the stock price is $32 per share. So that's not, you don't see that every day. You see that every once in a while. And I took a PE at 12, but really based on their growth rate, I would have naturally went 18 to 25. Their growth rate's going to be higher than 15. It's actually going to mean 25% growth on earnings per share. So it's highly discounted by 88% on earnings per share valuation. So this is a highly discounted stock. And I'm going to follow this stock and see if I want to buy into it. Let me look at what analysts were saying again on this stock, because so these guys are saying it's 25% discounted. There is somebody who's quite high in it, but they're not as high as what these numbers are showing me. So what's wrong with this picture? I mean,
how many people are, it's a pretty high number of analysts.
Yeah. And it's not like a tiny cap. It's not like, oh, there are 500 million. No, it's 20 billion. This is like, okay, this is getting a little bit serious on the market cap here. So this one here is a good one. I'm going to be following this.
Yeah, I am too. The chart looks good, and
I'm going to drink another cup of coffee and go through the numbers again.
Yeah.
Yeah, good one. And, I wouldn't be surprised. They're carrying so much cash on that balance sheet. I own two businesses that are similar to this, and some of the behavior that I really like. First one is United Therapeutics. They continue to invest in like the next drug they want to discover and add, overall, that's a good thing for mankind that United Therapeutics is discovering the next drug. And they just had very positive results from one of their trials. So the stock shot up like 30 or 40% in one day. So United Therapeutics is taking their cash and doing good things with it. The other company is Catalyst Pharma, and they acquired other smaller companies and made their company bigger. And those drugs are now commercialized and is growing Catalyst Pharma. Genmab, with their cash position and their very high profitability, should do the same. Like, hey, go grab some other businesses, acquire them. Or you guys are smart enough to create this drug, go create some other drugs. Go create other treatments to other diseases that people are dealing with, and use your cash flow for those purposes. Either option, this is really exciting, and it's a really exciting company. So thanks for bringing it up, Brandon. Good one. That is Genmab. We'll see how this one trades going forward. All right. So what's going on, stock market? Let's see what's going on. Whoa. Hey. The stock market has awakened. It's a little bit agitated that stock sold off yesterday, so it's rallying up. But it's early in the day. Stock market's been open 50 minutes. I'm not going to count this as a green day just yet. We will see. So that's looking good. What's the heat map looking like? Man, NVIDIA. Look out, world. NVIDIA's in the room. Apple's looking good. Broadcom's looking great. Meta is in the green. Google is going to stop losing money for investors like me. Amazon. I would really appreciate if you could look at Amazon. I am betting big on Amazon. Betting big. Don't have that influence you. But I would like to hear what you're seeing in the charts. Because I love their business. I don't think I'm going to need to convince many that their business is terrific. And the stock is not keeping up with its peers in 2025. And that has been the Amazon kind of trend, or not trend, but that's kind of like the personality of the stock is they don't care about their stock price. They're like, we're going to be the best e-commerce business in the history of mankind, obsess over it. They deliver products, and I'm still amazed by it. I'll order something on Amazon and it's delivered the same day. And I'm like, how is that possible? And their cloud business is the biggest. It's humongous. They're in robotaxi. Their video streaming platform, which is, as a consumer of video, I think it's okay. It's not great. It's not as good as YouTube or Netflix, but it's okay. But Amazon hasn't kept up with its peers. I think the future is super bright because their cloud business is just becoming more and more valuable. So it'd be interesting to see what you're seeing in their charts. United Healthcare is up. Go United Healthcare. That's one that months ago I've called it out. This stock is a definite winner long term. It's on its way. It's on its way to $600 per share. So we'll see where it goes. A lot of green now. Looks like the market is letting go that negative attitude, and the stock market has a can-do attitude at this moment. Look at all this can-do attitude. ServiceNow, we can do it. Intuit, we can absolutely do it. Arista Networks, killing it today. 6%. What's happening at Arista Networks? Looks good. All right. So, would you be able to kind of share what you're seeing on Amazon?
Yeah.
All right. The screen is yours, sir.
Yeah, so I have a 5-year daily chart pulled up here with a couple of resistance support lines. This one sitting at 185, which is curiously, I think, where I have... No, I don't have a note on that one. I've got the price written down where I have my buy price, but it's not far from this line that I have drawn here. So I typically pick it up when it gets below that. But this line, we can see it served as resistance at least 4 times over the past 5 years. 2021, twice. 2024 here and here, and then it actually broke through that resistance during April, which I discount much of the time because that was an event that occurred that kind of shocked the market, and the entire market was down on that event. So whenever I'm looking at support and resistance, I'll often exclude this little bit of anomalies that we see during that time.
Right.
But then it's traded up to about 242 in February. And that was quite a while before the tariff announcements were made, but there was already talk here that there would be tariffs, and Amazon sold off because of those, what the tariffs could mean. They were actually worse than the market was pricing in. So we had that really negative shock, but it has not really got back up to that. It's gotten pretty close, but hasn't broken out above that recent high. So it depends here in the near future. Does it stay in this trading range, or does it actually break out? So I'm buying here. That's where I have my price to buy set.
Mm-hmm.
And then I'm watching to see if it'll break out above this trading range.
Yeah, and very interesting. What with Amazon, my investing plan thesis on Amazon starts with, who are these guys? Just who do they think they are? And all kidding aside, Amazon has these really powerful moats, competitive barriers on their e-commerce business, their network power, the biggest e-commerce platform on earth. It's getting faster, bigger. They have over 1 million robots in their warehouses and operations. And these robots serve a very useful capacity. And it's really impressive what they're doing there. Their cloud business, biggest cloud infrastructure business in the market. So that's a very powerful network effect as well. So this is a desirable business that has a very powerful moat. Having said that, the way I treat businesses like this is fair value. If I want a piece of this really powerful business, is a good investing idea for me. And when I value Amazon, I get to a 14% discount because it's cash flows. And again, Amazon, they will tell investors, they will tell everybody, we will sacrifice short-term stock trends for long-term intrinsic value benefits. They will verbalize and say, we are after businesses that maximize future free cash flows. They will say that. I love that about them. It's like, yeah, that's what I'm talking about. You shouldn't be focused on satisfying the next quarter. You should be focused on, how do you become a $1 trillion revenue company on their e-commerce side? How do you continue to be, like right now, they are the leader in their cloud business, right? And how do you move from 123 billion in revenues from your cloud business to 200 billion? So all those things I really like. So I've been accumulating Amazon. I've already accumulated a ton of Google, a ton of Meta, Robinhood, Uber, and Amazon is one where the market's doing me a big favor. You showed the charts. It's not up and to the right. Okay. And I believe that Amazon's going to follow the trend that we've seen our friends over at Google follow. Let's look at Amazon first, then I'm going to rationalize what I think is going to happen. So hasn't done much. Year to date, 1.7%. And it's underperformed the S&P. It's underperformed its peers. But Google was in a similar situation. Look at this. Look at these charts. They're like right on top of each other. And then our friends at Google broke out. Boom. And Google is up 29.57. Most of that gain happening really in the last 2 months. Having said that, I think these charts are following each other, and Amazon's going to catch up to its buddy. And I think Amazon's going to rally up in the next 6 months, rally up hard too. Their business is just too good. So I'm seeing this as an opportunity for me. So I'm buying into Amazon. And I've got a lot of chatter coming in. So let's see here. I'm going to try to not miss anybody's. Wow, man, you guys are showing up today. Thanks, everybody. Appreciate everybody coming into our live stream today. So let's see. I think Magical Self, good to see you. Ben 10, Palo Alto up 40% over 6 months. What is Palo Alto doing? Palo Alto is having a good year. And yeah, from here, 152, that's looking good. Guess I could chart it better here. Look at that, 40%. Beautiful. So the market offered us Palo Alto at a nice price a couple times. If you think that's good, you want to make some quick money over 2 months, you could have made 28% on Palo Alto. Now I'm trying to make money on Fortinet. So my horse in the race is Fortinet, which I think has been discounted way too much. And interesting how these things follow each other. But now you see how Fortinet is not getting picked up like Palo Alto. But I think it will. The fundamentals look terrific. So I'm putting money into Fortinet. So thanks for bringing up Palo Alto.
Let me show you the chart. I don't know if this one's done running.
Oh, Palo Alto?
Yep.
All right. Maybe Palo Alto's got some endurance.
Yeah, let me just finish annotating this. So I've showed you guys these before. This is a cup with handle pattern.
Mm-hmm.
Price pulls down, makes a cup, comes down, makes a handle, and then breaks out above that handle. And this happens more often than you want to imagine. But if you go to this right rim and just take the close of 208 and subtract the lowest value here, 167, add it back to that value, the price target becomes 249. Probably here within the next 6 months, if I was guessing.
Interesting.
Yeah, these patterns are very powerful. I bought numerous of those, and in fact, I can just show you some. Let me. Here's Qualcomm. I had a price target of 170. It got to 174. So that was one that I looked at least 6 weeks or so ago. Let me find some more. Tesla cup and handle hasn't quite made it yet, but you can see it's on its way back to the 488. It tried to get there. It's pulling back a little bit, but this one's still working for me at the moment. I know I have some more. I've shown several of them, but these work very well. These cup with handle.
Yeah, it looks great.
I'll see if I can find some more. So I have a target based on that pattern of 249.
Perfect. All right, let me keep moving because we've got a lot of good comments coming in. And so we handled Palo Alto. Falls Grave, interested in YRD. I'm going to handle that next. But I'm going to go through the comments because I've got really 20 minutes to go and I've got to move on. I've got something to do in 25 minutes. Ben 10, and I'm going to need to kind of keep it to one stock ticker per member just because I'm short on time. And we've got a lot of good comments. So I want to just cover everything. BBW, you took a position in it. Interesting. Braden, market outlook, big pullback. So my market outlook is that we are dealing in an expensive market and I could see a pullback happening. I can't say when it's going to happen. It's like, I don't know if it's going to start tomorrow, if it's going to start in a month, but we'll see. Pullbacks are part of the game. Peyton, you want to look at Reddit? I want to look at Reddit. And we will look at that after we look at YRD. Because Reddit has been selling off. And let me tell you, if you give me the right price on Reddit, I will buy more shares. Peter, SPGI, I'll have to handle that on a different occasion. We handled that, I think, a ticker you had. Cream Biggins, you are doubling down on Reddit. I'm going to handle Reddit. It's going to be the second stock. Good to see you. De Jesus. Great. I have never seen anyone. Interesting. Well, I'll let other people comment on that. Pedro Miguel, Mercado Libre. Yeah, we can look at Mercado Libre. That's on the list. That'll be third up. And I think that'll bring us to the end. Thanks, everybody, for tuning in. All right, so let's get started with YRD and start there. So that's Iren Digital. And Iren Digital provides financial services through an AI-powered platform in China. Its platform provides a suite of financial and lifestyle services. The company offers financial services, which provides a portfolio of loan products to borrowers, insurance brokerage services, consumption and lifestyle services, including non-financial products and services to meet various consumer needs. So these guys are in China. They're using AI. All right. This is a good idea. Okay. All right. So they're trying to create AI solutions and offer them to small, mid-sized businesses. Good idea. They're in China. It makes it riskier because I'm in the U.S. and I don't know China as well as I do the U.S. And I also don't stay informed, not because I don't want to. It's just the news feed that I get is U.S. based. Market cap, $559 million, small cap. But revenue is higher than its market cap. It's also really profitable. Okay, man. So we looked at Genmab, where its earnings per share was unbelievable. I had to verify it. These guys are also making a lot of money. So that's good. Nothing wrong with making money. P ratio of 3. Nobody's analyzing this. They're going to announce their earnings on November 19th. Over the 1 year, market hasn't found this stock. Over the 5 year, investors did okay, especially if you bought back here in 22. You bought at $1 a share, you're up 600%. Interesting. Very interesting company. Okay, so these guys are not growing by leaps and bounds. This is in the Chinese currency. I believe it's 0.14 is going to be our conversion. Yeah, 0.14. They're growing at 12%. It's not phenomenal growth. It's okay, but I kind of wish I would have seen a 50 there instead of a 12. They are profitable, nice and profitable. So that looks good. Free cash flows there. Again, 0.14. So this is probably about, I'm going to say about 200 million in free cash flow. Gross margins are fantastic. Profit is good. Free cash flow yields is very good. Fundamentals look good behind this business. Very good. And I'm going to guess that their balance sheet's going to look okay. Let me see if my guess is correct. Yeah. $572 million of cash, only $5 million of debt. So this business is going to be discounted. This business is, so free cash flow, this is about 200 million. They're in China. So safely, this business is worth $2 billion. And it's trading at $5.59. Highly discounted. This business, I would like to keep an eye on. And I'm going to do more analysis on it. I think it's discounted substantially. I think it's worth about $2 billion. And so that would be about a 70% discount. Okay, so that's a good find. Very good find. Now, the tricky thing with China, first, as soon as a company is operating in China, the same fundamentals in China, and if you had a company, the same sector, industry, and fundamentals, there's like a 50% discount if it's in China versus US. So this one here, if it could grow faster, I'll be more excited. That slow growth is a little bit of a pause. Like, whoa, why aren't you growing faster? You're in AI. Everybody's crazy about AI right now. So I probably wouldn't buy. Like, I'm going to do full analysis on it on my own time. And I'm going to watch their earnings and read their earnings and then see if they can increase their growth rate. I'll be more interested in investing. If I see them slow down, I'm going to be like, oh, there's something going on here that I don't like. You got to keep growing. You're small. You're not gigantic. So I'd keep an eye on that. I think it's discounted, but those are my comments on the Iren Digital. Okay, so the next one up to bat is Reddit. What's going on in Reddit land? Well, the stock's going down. That's what's going on. In this stock market, man, sometimes I think it does me a big favor and discounts a stock like Reddit, and then I buy it and I go up and, my stock goes up in value. And I go, wow, stock market was so generous. Then it comes back and starts doing it again. Man, this stock market, one of the most generous bodies of people transacting that I've known at times. They don't know they're being generous by offering great discounts. Where are we at? So it's still priced a little high. So my value on Reddit is $170 a share. We're getting close. You give me a share of Reddit at 170, I'll buy it. But right now I'm not buying. We're still a little expensive. What are you seeing on Reddit? Do you have any comments on Reddit?
Yeah, when you're talking about your price, I'll just put a resistance line across here because it's pretty supportive. So I'll bring it down to about 175. You can see that it was tested many times back here in 2024. So that looks like it'd be around the 200-day moving average as well, which ought to act as support. So let me save this real quick. Make sure it's in the right chart list. Yeah, so that's not far above that. Your price is not far above the 200-day moving average. One concerning point right now is the 21-day is turned over.
Mm-hmm.
So once that turns over, that would have been, if I owned this, I would have been trimming pretty close to this level and just waited for the technicals to kind of bottom out. So I wouldn't sell it all, but I would have trimmed it. That's usually the way I operate. But the 21-day is crossing below the 50-day today. So that also tells me that we're going to have still more to go. But keep an eye on this. If it starts bottoming out, then it's probably a pretty good time to pick up some shares, especially if it gets to Victor's estimate on value. The RSI has gotten pretty low, sitting around 34. The PPO is in negative territory at the moment, but it looks like the delta between the 12 and 20-day moving averages is getting smaller, which means that the shorter, the 12-day moving average would cross above the longer average, and that starts getting more bullish.
Yeah. Interesting. Yeah. And they announced on November 5th. I'm sorry. I don't think that's right. So they announced on October 28th.
Yeah, that's what I have too.
We are 20 days from Reddit. It's interesting how this chart is going down. Maybe investors are like, man, I really want to hear what the company is going to announce before I, either I want to sell my shares and hear what they have to say, but we'll see. We'll see what they announce. I think the last time they announced, the stock really, really ran up. So, all right. So let's move on to Mercado Libre. And I think that's going to be our last stock because I'm out of time after this one. Thanks everybody for tuning in. Great live stream. Thanks for all the ideas on stocks. Mercado Libre. Now, this is a company that's experiencing growth. At the same time, it's a market that has competition. Of course, Amazon's in their market, but these guys focus down in Latin America, which is why I like the stock. Hey, these guys are going to focus in a very good market where there's a lot of people that want to buy stuff, and they'll be buying it on Mercado Libre. Recently, they've really sold off. This is a pretty good sell-off. And, is it getting to a point where, maybe I need to buy some shares? Let's take a look. So these guys announced November 5th. This is a big cap, 108 billion. Revenue, 24 billion. PE ratio is high, coming down. This is where it's at for Mercado Libre, is growth. They're experiencing a growth trend, and it's been there for a while. And the quarterly, 33.8, so looks good. Now, our friends at Amazon have been trying to compete with Mercado Libre since 2010. And guess who's winning that battle? Mercado Libre. Why? They understand the Latin American market. They have the right catalog. They communicate with that customer better. Amazon's awesome. In the US, unstoppable. But down, let's say you're trying to sell stuff to people in Colombia, Mercado Libre does that better. Argentina, Mercado Libre. Mexico, Mercado Libre. These guys know that market better. And I'm willing to say that I love you, Amazon, but Mercado Libre is going to beat you in Latin America. They're just going to do things better. And they also have a fintech product, which is doing quite well. So what's my value on this business, and what am I planning to do? Because if the market wants to give me a nice discount, hey, I'm going to take it. Got to be polite to this market. I'm discounting Mercado Libre 10% because it's out of the US. And these price reductions are compelling me to buy more shares of Mercado Libre. I'm going to be buying shares of Mercado Libre today. So this is a business, I diversify my portfolio across a couple of things. First, most of my holdings are US based. And I own 2 stocks in China, 1 in Singapore, which is CE Limited. And I own an ETF. So I've got a little exposure to China, but it's only like total of like 5% of my portfolio is in China. Down in Latin America, I have 2 stocks that are Latin America based. One of them is Mercado Libre. And it's only like, less than 2% of my portfolio. So when I buy into Mercado Libre, I'm serving myself in 2 ways. 1, buying a terrific business. But 2, I'm also diversifying into another region of the world. I think the US is awesome. I think we're going to continue to be awesome. But I also think that other regions of the world have higher growth rates, GDP growth rates. There's also more fertile markets available around the world where people are, for the first time, and this is no exaggeration, are buying a tablet-based phone for the first time and are able to shop on Mercado Libre for the first time. That's happening in Latin America. That's not happening in the US. I've owned, I don't know, 20, 30 different phones that allow me to browse. My wife, ditto, right? Well, that's the US. Down in Latin America, you might have somebody that's like, hey, 25-year-old, 35-year-old, first time they're buying stuff online. So I think that's really exciting for Mercado Libre, and for them to serve that market, I think they're going to do really well. Any thoughts on Mercado Libre?
Yeah, let me show you the chart real quick because I think your decision to buy today is a really good one. So here's an uptrend where they bottomed out in December of last year. I'm not going to use this bottom because that was the April tariff low. I'm rather going to use the low that was actually the next day when it started improving. So that's where I've decided to attach the trend line, and you can see that it's coming down to touch that trend line right now, which is just slightly below the 200-day moving average. The RSI is down at 34.16. PPO is in bearish territory, but the divergence is getting smaller, so we'll probably have a crossover here pretty quickly. So this looks like a really good place to be buying. Right. I can also look at the price to volume bars. You can see that we had a lot of people buying in the 24.53 to 23.79 range. But then the next range that is providing support here is 21.36 down to 20.62. So there's a big shelf of buyers just waiting in line to buy it just below this point.
Nice. Okay. Looks good. So those are our comments on Mercado Libre. Great analysis. Thank you, sir. All right, everybody. So we've come to an end of another live stream. Great session today. Thank you so much for attending. Good luck with your stocks today. Great job today, Daryl. Thanks for joining me today.
Thank you, Victor. It's good to be here.
Everybody have a terrific day. We're going to stream again on Friday, and hopefully you'll join us. And for now, everybody have a terrific day, and we will talk to you soon.
Take care, everyone.